We had, if you guys remember, this is the yellow was price, and we came down to a double bottom, and then Elon Musk tweeted about Bitcoin in his profile, and we pumped. We had Ruffer, a hedge fund, who bought Bitcoin, and it grew to $1.3 billion, and they sold half their position, and it looks like they sold down on that pump with $650 million of Bitcoin sold off. So they sold half their position there. And then we had this crazy sort of move upwards, as in crazy as in it was just very consistent, and there was no waves involved. And so I think this was in that zone where Tesla was accumulating. We saw the SEC like fire. I think they announced, or there was an announcement that that Tesla had bought 1.5 billion through the SEC sort of filings, and then we had this price jump, and we crossed the all-time high. We crossed the all-time high very quickly, and you can see it in this zone. This is the blue line is the funding rate in which what it costs for derivative traders to hold on to their long positions, and you see it jumped upwards, which
is that
which
Willy,
means,
sorry, is that cumulative, or did you pick one exchange?
no, that's all of them. That's all of them. This is a glass node. I'll show you the
Cumulative,
real
okay.
chart. It's
It's
it's it's
cumulative, got it.
it's volume weighted. So you can see
Mhm.
the where is it? Green chart. Oh, wrong one. This one here. This was the pump here, and we shot up there, and I have for maximum pullback on the market. It's based on like a fundamental floor price that I have, and how high we were trading above it. And if you think about the floor price, it's like the minimum price that the before like that long-term investors will. That's this price that long-term investors will support. Therefore, it forms this kind of floor minimum price, and how high we float above that is essentially what this red line is. And you can see right here the pullback. I'm calling it the overheatometer. Just jumped right there, and we went up and up and up and up. And then we had this drop in price, and it coincided with this spike here, and we had this. Let's see where I find it. See that spike here? This chart here is essentially the net volume of Bitcoins going in and out of all the exchanges, and so like most of the time we're just hovering around zero. Often a lot of downward movement here as people are buying and scooping it off the exchanges, and we had this spike here, which was 28,000 Bitcoins that was sent into Gemini exchange. And I spoke to Glassnode about this right while that was happening, and they confirmed that that was a wallet labeling error. Upstream of their data provider was showing this flow going into Gemini, and actually was a cold storage movement within Gemini exchange. But that information was spread amongst traders, and immediately you can see the price started to react. This is it's coincidental. I'm thinking this is the reason. I remember waking up and seeing like, whoa, what was that? And I saw a lot of people tweeting about this and sharing this information on Telegram. I actually sold down on that as well until and contacted Glassnode, and then we started to see liquidations. Essentially, this whole downward run was, as we started to fall down, you can see the long positions wound out, and there's a liquidation chart somewhere which I haven't got up right now, which showed that in this zone we had a lot of liquidations. But essentially, that buying momentum got halted, and interestingly, it was most likely from bad data. So we're in this sort of downward run now, and I'll just flick over to some fundamentals on the exchanges. Well, maybe I'll pause here if you want to talk into that?
Yeah.
No?
So it sounds like the selling was kicked off based on misunderstanding of the 28,000 Bitcoin transaction. But once the selling began, it kind of liquidated some people, and it kind of took on the life of its own. So it's one of those things where a misunderstanding of a news event caused alterations in how the market might have perceived it if the FUD didn't actually happen because it was unnecessary.
Yeah, correct. I mean, this was Glassnode data. Also, CryptoQuant also was showing the same data. I think we're both having the same upstream data provider in that regard. I think CryptoQuant. Oh, I saw it. They tweeted that out. What was it, 5 days ago? And I think that might have got some pretty urgent sell orders on people reading that. They have an alert service as well that goes out to traders. So yeah, that led us into this downward momentum. Lots of liquidations, sell down. Remember, this whole area of inflated price is from derivative traders buying, not actually spot buying, and this shows that there's a lot of high, short-term speculation going on here, pushing us quite high up in the overheater meter. That was 33.
Let me ask you another question. I know you have more charts to do, but how much do you put into F2 pool? So everyone is talking about F2 pool. Now, F2 pool is a pool, and everyone is talking about how much Bitcoin F2 pool is selling. And I'm a little bit confused on that concept because, I mean, F2 pool could have been collecting their fee for running the pool for the last 5 years and finally decided to sell their giant hodl. Other than that, they just give out that Bitcoin to the miners inside F2 pool. So do you have any commentary on everyone freaking out over F2 pool apparently selling hundreds of billions of Bitcoin?
Yeah, I don't even I'm not even seeing it in this data. I think a lot of that comes from CryptoQuant, and I don't know how they're getting their data. But look, this is transfer of volume from miners to exchanges. Let's go to 1 day. Okay, so this is, remember, like 900 Bitcoins a mine per day. Okay, and I'm going to run a moving average, so this is a little bit smoother. So we've got like, what is it, 800 Bitcoins per day at peak. This is like the coins moving from all of the miners going to the exchanges, and like it's not a lot. Look at that. That's like let's run seven. That's a peak there. That's 700 Bitcoins. So if I go 700 Bitcoins times, like, let's call it up around that region, $50,000, we're talking about $35 million of sell-off coming from the miners. And, I'm reading around $2 billion of capital is coming into the network per day during this bull season. It's not a big, for me, like, I think this whole miner stuff is just overinflated. The way I look at it is that once the bull market, the main bull market, the full mid-flight bull market we're in now is underway, you're talking billions per day coming into the network. And so, look, if you've got that amount of capital, 35 million is just a joke. What happens is when you're in a bear market or a sideways market, or when we're accumulating, when it's the early stage of bull market where the price buying, the buying power is very, very fragile, the miners have a lot of influence. But once that halvening's kicked in and you've given a bit of time for that buying momentum to start up, it's just tiny what the miners sell pressure is compared to the rapid buying that we've got coming in from this cycle, the institutions and high net worth guys, and now we've got the retail guys coming in as well. So anyway, I'd like to put to death that fear. So moving on.
All right, let's move on to the next chart.
Okay, So we know that this is a I think it's a 4-day moving average of the flows on exchanges. You want to just ignore this bump here. This positive bump here is that 28,000 Bitcoins that flowed in that's been averaged out over those 4 days. So actually over this entire phase, we have very strong buying, a lot of high net worth and institutional buying coming in, scooping it off, moving to cold storage. I say that because the new retail tend to buy and keep their coins on exchanges. So the whales or institutions that buy and move to cold storage. And that's what we're picking up here. It's very strong buying, as in when we're negative below this line, that means that the net flow of Bitcoins are coming out of exchanges. And you can see like we're in the zone here, last seen in this run up here is the black line underneath. You can see the price moving up. That powered.
I'm sorry, Willie, what's the date on that? If you scroll down a little bit, I can't see
January. That's kind of New Year's pump, hey.
Perfect.
It's just
Okay.
like, yeah, that's yeah, so yeah, it's very, very healthy. See the blue line here? This is the USDC that's being created and sent into the exchanges to buy Bitcoin. Maybe Ethereum, you could argue as well. It hasn't skipped a beat. It's just untold buying pressure. So
Hey, I'm sorry.
essentially,
Remind me. USDC. Who is that? Coinbase's stable coin?
yeah, it's Circle, but Coinbase.
Circle.
Yeah,
Okay,
it's
Circle. That's what it is. Circle. Yeah.
Circle slash Coinbase.
I forget who controls it. That doesn't really matter whether it's USDC or USDT or I was just.
Yeah, it does. So USDC is US based. The US regulated institutions will buy USDC. They will not buy Tether, because that's an offshore kind of thing, mainly in Asia. If you want to be US regulated, you buy USDC. So this is a really good proxy to mainly institutional buyers that are minting these USDC, converting their cash into USDC, sending it into Coinbase, and buying. So it hasn't skipped a beat. It's strong as. So the underlying buying pressure has not skipped a beat. It's just continued. See, these are both 3 months. So this price line is very, very much in tune. So we had a bit of a dip here, in this zone here, but more or less we're very, very strong. And I don't know how Tesla bought their stuff, their Bitcoin, but we had a bit of a spike in this zone here, exactly where I thought maybe Tesla bought. This was the Elon pump there. So yeah, so underlying it, we've got very strong buying pressure, whilst we've got very strong selling from speculators that are selling off of their derivatives and margin positions. So that's a view I have, and you can jump in there, or I can continue. Maybe I'll continue a little. So this is the view of the miners selling. So the miners have stopped selling, okay? And I've always said it doesn't really make much difference. I love to see this. It's like last time the miners stopped selling, that they pretty much sold the bottom, right? So they sold the top there, but they're depleted now. This chart here, the red chart is the red, like both of these charts are looking at either deposits or withdrawals going into exchanges. The red one here is the withdrawals, and it's the average withdrawal size coming out of the exchanges. The green is the average deposit size going into exchanges. And you can see we had sell-offs here with large peaks. So larger positions, like more whale type people were selling on each of these down runs. And so far, I'm seeing very, very little large volume selling right now. So I think well, definitely this last wave down is quite different from the other two we saw. It's also a weekend, got to bear that in mind. Maybe on Monday everything fires up again and we have large deposits, but that could be the case, and we have another leg down. But like so far, this last wave down looks a little bit different from the others, and I'm getting a sense that we're approaching a bottom here. Even in the zone, we've got like this whole volume profile band. I'll just go to the technical charts here. So this is price discovery, how much volume is traded at each price point. We're inside this band here, and it's still within that, you know, like strong support where we've had a bit of price discovery. There's a gap in here we might suck down into, which is pretty much your bottom, around 41,000. I think that's pretty valid. Where I've got a dotted line, it's 38.8, which is exactly on my modeling of the lowest extreme we can go to on a daily close. That model is held for 12 years of Bitcoin's bull market. So yeah, I mean, if it comes anywhere close to that, I'll be buying and buying and buying. So I don't know whether we're going to go down any further. I'm not a short-term oracle. I just look at long-term demand and supply. I think we're pretty close. We're probably 1 to 2, maybe 3 days away from a full reset before this thing launches up again. That's just my sense from some of the models I'm looking at. I'll throw this chart up, which is the equivalent of that volume profile. It's actually a much more precise view of it because it's looking at the wallets, and it's looking at the price at which people bought in based on the time those coins moved into their wallets. And this is the cluster we're in now. It's the same as that volume profile we saw before, where this is stacked vertically and we've got a gap inside here, and then there's strong buying. This is doing the same thing for hodlers, which is what I consider long-term investors, which has precedence over just what we see on exchanges. And so I think this whole zone here is going to be quite strong. If we break it, we might get a wick down into this 40, 39 $1,000 range, which should be an absolute steal. I think this zone here will support it. Yeah, that's about it. I'll pause here. I can talk about. There's a few more.
Yeah, I definitely have questions. So there's 2 questions that keep coming up. Let's handle one of them. Since you're on Glassnode, can you take a look at the net unrealized profit and loss index, NUPL? Are you familiar with it? Maybe you can explain what it is, and do you utilize it?
I don't use it much. I have to read it every time I look at it. Maybe that guy can explain it. Net unrealized profit and loss that discards transactions between addresses. Yeah, it seems to be adjusted. Provides an improved market signals. And I wish they could improve that. What the heck that is? No, I'm not going to talk to this because I don't use this chart much.
Okay, no, that's fair. Another one that is coming up, and I think the answer to this is probably simpler. I mean, I'll give a simple answer. Maybe Willy can give a more detailed answer. The question comes basically in 2 forms. If everyone just holds Bitcoin and doesn't sell, so liquidity is low, why is Bitcoin becoming less volatile? And a similar question, since too much of Bitcoin is moved to cold storage, like off exchange, don't you think that this will lead to a lack of liquidity at the exchanges and price will be easily manipulated by whales if they want to? So my quick answer to that is you can't just look at how many Bitcoins are coming off exchanges. You want to look at, you want to factor in how much Bitcoin has gone up in price. So if, for example, there is X amount of Bitcoin on the exchange, and 50% of that Bitcoin has come off the exchange, but the price of Bitcoin has gone up by more than 100%, that means there's actually more liquidity in US dollar terms on the exchange, even though there's half the Bitcoin. So just because Bitcoin is coming off exchanges, it has to be in relative terms with how much market cap is on the exchanges. But maybe Willy has a more detailed answer.
Okay, so liquidity is this bandy around term that everyone likes to use, and it means many, many different things in different contexts. And so, you know, if you're a trader, liquidity is how much money can I move? Can I buy or sell $1 billion or $2 billion worth of this asset? And how much will the price move in accordance to it? So essentially, it's the steepness of the order book. Is the order book showing that it would take a $1 billion sell right now, and how far would the price go? And so that kind of liquidity is defined by essentially how many bids and asks are on the order book. All exchanges have liquidity providers who temporarily build those walls up so that someone, if they want to dump quick, they can have that access. There's another definition of liquidity. You could think of that as more the amount of volume. So if there's a shite ton of volume moving, you can put like limit orders in and wait for the market to come to you. That's another way of looking at liquidity. So Bitcoin has insane liquidity in that sense. If you want to buy or sell this asset, and essentially volume monitor FTX. I think I like their monitor the most. It has insane amounts of volume. Like, look at this. This is like we're trading $133 billion per day in volume, but across derivatives and spot. And so, what was that? 52 billion total in spot volume. So it's just ridiculous the amount of liquidity we've got. It actually shits all over gold for the same size as Bitcoin. So don't worry about buying or selling, getting access to Bitcoin or the price moving lots, because the order books are thin, because they're really deep. You know, Tesla's not going to put $1.5 billion over a few days into Bitcoin and moon the price to $5 million like if it was, say, Dogecoin. So that kind of liquidity is very deep in Bitcoin. It's becoming, I think it's fast tracking to be one of the most liquid markets in the world. Then we have this other thing that people are mixing up with, because Glassnode put this out a while back. And it was, I actually asked, I think I was asked them if they could do something like this, and they did. They managed to look at all the wallets. They looked at all the wallets on the network, and then they clustered those wallets, and they go, right, each wallet cluster is a different entity, it's a different participant. We can see that from the transactional interaction. And then what we want to look at is the interaction of those wallets and see their history. And we want to classify them into 3 different types. We're going to classify them to illiquid, which is a generic term. But all that means is these are hodlers. They buy, and very few of their movements signify a selling. So these are buy, hold, accumulate guys. And I've called them illiquid, which is the confusion here. Then we've got this orange, which is liquid. These are the people that you see a lot of coins moving in, and you see quite a few moving out of their wallets. And then you've got highly liquid, which is the red zone. And this is people who move coins in and out. So you're probably, they're much more, pretty much trading a lot more of their coins. So that's what we're talking about in terms of, you could think of this as more like the amount of the supply that's being locked up. And so there's a lot of coins being locked up, and that's creating a supply shock, and it does mean the price starts to move upwards. But when you know it moves upwards, it's still very liquid in terms of, if you're trading $1 billion, it's still relatively liquid for you. It just means that the price is going to it. I would say like if you're into altcoins, most altcoins are trying to design what you're seeing in Bitcoin, where a lot of people are strong hodlers and they're holding on really strongly to their coins. What the altcoin networks are doing is they're inventing staking, which is like, I'm going to lock it up in this mechanism and I'm going to pay you money, usually, money that's printed into the supply to incentivize you to hold and lock up those coins such that the price can experience a supply shock and move upwards. Hope that explains it. Yeah, like there will be a supply shock, but it's not like anything you see within like, name some pump and dump coins like Litecoin, Dogecoin, a whole bunch of them that just go mooning over a very short amount of days. You don't see that in Bitcoin because there is very strong short-term liquidity in the billions of dollars. So anyway,